Greetings and welcome to my channel. This is my first monthly update video. My goal is to provide some basic information on housing, Social Security, inflation, and retirement. I'll update this about the middle of each month and see how it goes. I want to start off with the Fed this month since they have a lot to do with all of the other topics in this video. Last month, they increased the funds rate by 25 basis points. And indications are that they're almost done raising rates to fight inflation. This is the CME tool, and it's predicting that they're going to stay at that level at the next meeting in September. And you can see it's 86.5% feel that it's going to remain the same, and only 13.5% are predicting an increase of 25 basis points next month. The rate increases have led to increases in the mortgage rates. This is the 30-year fixed rate chart, and currently we're at around 7%. A month ago, we were similar, around 7%. Going back 1 year, August of last year, we were down around 5%. So we've had an increase of about 2% in the last year. Most of that, as you can see, was last fall. Because from August through October, we went from 5% to 7%. As we can see from the Redfin data, median home prices have basically stayed the same, and what we're seeing are just seasonal adjustments here during the summer of 22, summer of this year. We might be headed further down, but I don't know. The market is still pretty hot due to lack of inventory. So even with the higher interest rates, we're looking at continued high prices for housing. If we look at 5 years ago, July 2018, we were under 300,000 for the median home price. And we've been over or around 400,000 for the last year and a half now. And we all know housing isn't the only place where we've seen some inflation. The general economy as a whole, we've seen a lot of inflation in consumer goods, and the CPI has been up pretty big over the last 2 years. Currently, last week we just had the new CPI report, and it came out that we were up 0.2% over the month before, so over June, and 2.6% year over year. This is the first of 3 monthly numbers used to calculate COLA, because they'll use July, August, and September to calculate COLA. I've changed my calculation a little bit, or my estimate, the way I calculate the estimate slightly. And what I've done is I've taken the average of the last 3 months, the increase in the index, which ended up being 0.723. You can see it here in the gray. I've added that to the July number to come up with August, and then I added it again to come up with September's estimate, which leads us to a 3% COLA for the end of this year. So my original estimate from last month is still holding true. We will see when September's number comes out in October what the actual COLA increase will be. I don't know that I'm going to look at this every month, but I decided to kind of check out how eggs have done over the last 5 years and kind of look at those, not in comparison to housing necessarily, but just to take a look at something that's been kind of interesting over the last couple years. You'll notice in 2018, the fall of 2018, we were at about $1.65 per dozen, and it dropped as low as, in 2019 down to $1.21, $1.22 per dozen eggs. We had this spike, which was a combination of two things, with our regular inflation last year, and the main thing was bird flu that caused a lot of loss. They've lost a lot of laying chickens, and prices got as high as $4.82. I know actually they were higher than this in a lot of markets. I don't think they're still that high anywhere now. I've noticed they've come back down significantly. And according to the July number in the CPI report, they're down to just over $2 a dozen. And at my local market, they've actually been a little under this. So just thought it would be interesting to look at. Apparently, and I did a video earlier this year or late last year about what happened with the egg prices, and it doesn't take very long to repopulate the chickens, the laying chickens. So we've already seen that be mostly corrected, it looks like. Next, I want to touch on the S&P 500 performance, since Warren Buffett recommends investing in it and most managers can't beat it. You can see year to date, I'm recording this on August 17th. Year to date, we are up 14.54%. And since we're looking at the S&P 500 as a long-term investment vehicle, I wanted to look at 20 years and 40 years, and you'll see after over 20 years, the S&P 500 total return, including reinvesting dividends, is 560%, with an annualized return, again with dividends reinvested, at about 9.9%. If you are not reinvesting dividends, we're looking at 7.8%. But either way, you're looking at a good positive return. And again, this is 20 years. And the 40-year numbers are even better than that. So if you've been reinvesting, or if you've been investing in the S&P 500 since 1983, your annualized return, including dividends, is 11%. If not, it's 8.6%. And your total return, though, with dividends reinvested, would be 6,729%. Keep in mind, nobody, as far as I know, has beat the S&P 500 for the past 40 years. Maybe Warren Buffett, but either way, if you're going to try to pick somebody that would actually do that or think you can do it yourself, it's highly unlikely, especially over a 40-year period. Retirement investing is especially important if you're worried about Social Security and the possibility of it not being around, which everybody seems to be worried about. Well, not everybody, but some people are worried about. It's going to be around unless there's a major problem with the economy. If Social Security disappears, we've got bigger problems than whether or not we have Social Security. But the program has lasted 88 years. Earlier this week, it celebrated that 88th year. It was signed on August 14th, 1935 by FDR. And I just thought this month I would go over a few facts about Social Security, just a few things, including when it was signed. Currently, the average monthly check is just over $1,700 a month. And the tax cap for 2023 is $160,200. So anything you earn over that $160,200 does not incur Social Security taxes. So there's a maximum amount you pay. So if you make $200,000 a year, you pay the same in Social Security taxes as somebody who makes $300,000. Now there's some changes. They're looking at maybe doing some things to shore up Social Security, because we do know that eventually the fund will deplete. It won't completely run out of money because people working are still going to be putting money into it. The problem will be that they won't be able to pay out the entire amount that they're looking without borrowing, which the government's great at borrowing, but I think they're going to come up with some other solution before then, because this is an insurance program. I would expect changes, again, because of the problem with eventually there are going to be more people getting paid out of Social Security than will be paying into Social Security. So there will be some kind of changes. I would expect sometime in the next 5 to 10 years, there's going to be another age increase. There may be, and I don't think anybody's going to be able to get this through, but there's a possibility, I think, that they might even do a needs-based testing, to where if you're receiving enough money or you have enough, of course, you can always hide net worth. We know that rich people are able to hide net worth, no problem. So it's not like they're going to be able to they're going to be able to prevent you from hiding money. But there might be some form of needs-based testing. Not sure how that would work, but which makes it unlikely the government will be able to figure out a way to make that. But I would expect changes. That's all I have for this month. I hope this format is going to work for some people that maybe don't want to look at the news every day and see what's going on. Just because it's some basic information on Social Security, housing, inflation, and whether or not, that may apply to you. And if you might only want to see that like once a month. If there are suggestions you have for something you'd like me to put into a monthly video, some type of update on whatever it might be, financially, early retirement, something, I'll consider adding that. And if there are things you don't like, then I will probably remove them and see what works and what actually the viewers of this channel, which the few of you that there are, hopefully you'll find some kind of use out of this. And if you like it, give me a like, consider subscribing to the channel. And if you're going to retire to something.